Welcome to Leaders Talks, where we chat with members of ETF.com's Leaders Community. I'm Kristin Myers, Editor-in-Chief of ETF.com, and today I'm chatting with Joshua Joffe. He is Managing Director and Head of Investments at Revolve Wealth Management. Josh, thanks so much for being with us today.
Hey, Kristin, thanks for having me.
So you're a part of this leaders list, of course, which is these top financial advisors around the country. So I would love to kind of know, how did you even become a financial advisor? How did you even get into this career path?
Yeah, great question. I like to joke. I think I'm more of an accidental advisor. No, I was really fortunate to kind of discover this career almost inadvertently. As an undergrad, I did not take a single finance class. I was an English major. I love to write. I was pre-med because people told me to be a doctor. And I didn't really know what to do when I got my degree. But I came across one of my first jobs, I came across an equity trader who gave me a chance to just kind of see what he did day to day in his trading platform. And it was really exciting to me. That was kind of my first exposure to markets. And I managed to use that to get a role at a proprietary trading firm in New York, where I was completely inundated in markets. And from there, discovered my love for trading, for capital markets, but I really wanted to go beyond that and focus on portfolio management, which led me to my next role on the private client side, managing portfolios for high net worth individuals. And then from there, I migrated into the RIA world to really focus on helping households manage their entire financial world. Along the way, I did go back and I managed to take all those econ classes that I missed as an undergrad. I got my MBA. I got my CFP. Wanted to really know the theory underpinning what I was doing day to day. Yes, definitely a circuitous route that led me here, but I love what I'm doing, and I'm grateful that I have the opportunity to help folks every single day and really get to learn more about and advise people on making better decisions in their financial lives.
From pre-med to finance, I'm sure you're not the only one that has made that kind of hard left turn when it comes to your career. So part of you being on this leaders list, of course, is your use of ETFs, a very large use of ETFs. So I have to ask, why do you like ETFs so much?
Yeah, well, we love ETFs. And as an independent RIA, we have open architecture. So we have the ability to go out into the marketplace, and we do, and we get to explore mutual funds and separately managed accounts and private investments. Of course, when and where they make sense, we will absolutely allocate to them. But in our mind, the ETF is just the best wrapper. In terms of the technology, I don't think that people always appreciate some of the tax advantages, the efficiencies. We geek out on this stuff. Our clients, don't always, but we like to educate them and explain why, this really is a better wrapper. And oftentimes you can access the very same investment strategies. You can get the same exposure with the same risk and the same return profile, do it in a fully transparent, tax efficient, low cost ETF. It makes their lives easier. It makes our lives easier. We love seeing the innovation that the industry continues to put forward.
This isn't investment advice. This is not investment advice.
Yeah.
Have a favorite ETF or one that you're kind of partial to lately?
Look, we always say, simple trumps complex, less is more. I would say, without naming names or going into specific managers or tickers, I would say just having the ability to own the entire market, right? To buy a total market index fund in a low cost ETF wrapper.
Right.
And
Watching, that's VTI, if we're going to name it.
VTI, my friends at Vanguard would be very grateful for that plug. VTI is a great one that we love, that we use, and there are others as well. And just the notion of being able to literally own the entire market in a systematic, rules-based, tax-efficient, low-cost vehicle. I mean, 50 years ago, this was not possible. 30 years ago, it was not possible. And they daily liquid. Anyone with a smartphone can trade it, can buy it in any quantity.
Yeah.
I think that's really, really remarkable when you take a step back and look at what that means and how far we've come. So that's probably my favorite right now, although there are plenty of others.
That. I mean, a lot of people have been buying into essentially broad market funds have essentially been winning when it comes to just pure inflows, not only for 2024, but now that we're seeing the start of 2025.
Yeah.
So last question, this is going to be a little bit of a fun one. What would you say is either the biggest or the worst or the most silliest financial mistake that you have ever made?
So, we're here with ETF.com. We can talk about buying mutual funds. But no, I think I've been a Knick fan my whole life, a long-suffering Knick fan. 10 years ago, I had the brilliant idea to go out and buy season tickets because the team was bad. We thought temporarily bad. So we thought we'd be able to get some good seats, which we were able to get some good seats. And we thought it would be a great investment because we assumed the team would be good. And it's been kind of a long 10 years. They actually are good now, and we're able to make some value. So yeah, it was a long-term value play. We'll say that. It was a long-term value investment, but definitely buying season tickets to the Knicks in 2015, probably not the best financial
Are you
decision.
still a season ticket holder?
I'm still a season ticket
Oh,
holder.
you really,
Um, I don't
really
get to I don't
down on the mistake.
yeah. So today it's been great, but we kind of had to endure. I guess the lesson is don't try and time the market, right? Own the Knicks, but don't time the market.
No, I think that's great advice, just not only for basketball fans, but also for anyone who is interested in the markets or investing. Joshua Joffe, Managing Director of All Wealth Management, thanks so much for chatting with us.